been every day recently, that we have been hitting new highs, new record highs. How long do you think this trend can go on for?
So you're right, not only record highs on the NASDAQ, as you spoke about, but across a lot of the major averages. And I think a lot of that is predicated on, after a year of great uncertainty, we're starting to see some clarity that gives us hope for 2020 in key areas. The economy, trade, as well as the Fed will continue to be on our side in a positive tone, as opposed to the negative uncertainty that those policies surrounding that have created in the past year.
Rebecca, we just heard Rachel talk about some of the uncertainty that's been taken off the table. As you see it right now, has all of that uncertainty, are you bullish in the market heading into 2020?
Well, it's a hedged bull, if you will. Obviously, phase one China getting inked and signed in January, we hope, fingers crossed. Obviously, Brexit happening at the end of January, which will allow us to develop a trade deal with the United Kingdom that we've never had before, that will be phenomenal. And obviously, the new NAFTA, USMCA getting passed and signed into law very soon. All of these things give us bullish indications that, the trade winds that we've been fighting for the last 18 months are hopefully going to die down and really help us and support us. And I think that's what you're seeing right now, is investors are happy, and they're also happy because they've got fatter checks, and so consumers are spending.
Rachel, one sector, or the sector that's been the huge outperformer this year has been technology. That sector up, the XLK, up nearly 50% since January 1st. Do you still see any reason to buy some of these tech names at this point?
So I think technology is really a workhorse in the marketplace. It's the largest sector. It's going to drive performance, and we've seen its outsized impact this year. Within technology, though, we're seeing some of the more volatile semis and stocks that are in software really drive both returns in the S&P and the NASDAQ. I think it's important to peel back technology and look at some of the broader subsectors where there's still great opportunities.
And what
Microsoft is, within there, again, Microsoft is a company that we think has a good combination of strong fundamentals, a revenue source that is going to continue to be strong with its legacy desktop issues, but also a growth driver within its cloud computing component. Also, look at fintech. Companies like MasterCard and Visa have had very strong returns this year, but really the stage is set for them to have a decade long of strong double-digit earnings growth. So you can look to those two areas for some tech exposure that's not running quite as hard and with so much momentum as some of the others.
How about you, Rebecca? Are you seeing some opportunity in some of the fintech names, and also some of the particular, when you start drilling down into it, names like Microsoft?
As long as we don't get a Libra or something like that, that upends the whole industry that we've known for 50 plus years of Visa and MasterCard, right? I mean, if we get some kind of alternative payment system that is universally, globally available to all, billion Facebook users, then obviously MasterCard and Visa are going to have a little bit of an issue on their hands. But obviously that's a long ways off. And I totally agree with Rachel's point that when you're looking at the hybrid tech companies that not only have an actual software component, but actually have some kind of cloud-based component, whether it's a subscription service or it's a data center or something like that, even AMD, that's where we saw their strong growth this year, was also on the data computing side. So I agree with her 100%. The hybrid models going forward are really going to give us the long-term reliability that we're looking for.
Rachel, with U.S. equities right now at all-time highs, are you seeing some opportunity elsewhere outside of the U.S.?
So I think there's opportunity within sectors here in the U.S. as well from a valuation perspective, but I also think there's an opportunity to look beyond our borders at the international markets. In the last quarter, we've seen somewhat of a stealth rally in the all-world index ex the U.S., it climbing some 20%, with the backdrop being really the focus on the S&P up 29%. And when you look there, you see valuation opportunity. It's trading cheaper than our markets. And even when you look at it at the sector level, there is better opportunity in each of those sectors from a valuation perspective. Let's also not forget, as we're all still hungry for income, that the European markets and international markets have a dividend that is 1.5 times that of our S&P's 1.9%. So there's definitely some opportunities outside the U.S. And I'll just add on to that, you can see with trade tensions easing, the purview for global economic growth could be to the upside. And that would not only help those companies, but also provide a nice tailwind for the U.S. markets as well.
Rebecca, real quick, what are your expectations just in terms of economic growth heading into the new year?
I'm excited. I mean, I know that if you look at the cyclically, we are probably overdue for some kind of correction. I do think investors should be wary of the fact that it will be 11 years in March. Obviously, it's just an extraordinary long bit of time. But I will say that all of these trade tensions easing and the UK coming out of the EU and allowing us to have a relationship we've never had before with them as a trading partner, that's going to really create some opportunities. So I do think there's a lot of stuff pushing us, for a great bull market, but we still should keep in mind the cyclical nature of all markets, and keep in mind it's been a very, very long expansion.
All right, Rachael Aiken and Rebecca Walser, thanks for joining today.